Hello guys, welcome to the Trading Parrot. Yesterday we broke out above 103k and at the moment we seem to be retesting it as support. With all this liquidity from 105 up until 128,000, it's obvious to think that we got some upside potential. In today's video, we're going to acknowledge those facts, but as usual, we're going to challenge them. We're going to look for clues where this could fail. Stick around until the end of the video and let's see what we can find as a counter argument towards getting into those high prices in the upcoming days. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. This week, I've been recklessly keeping you up to date, not just with the daily update, altcoins, live shows with CoinBureau. If you haven't watched it, it was just streamed yesterday. I still think that they are pretty relevant alpha in that video. You can find it in CoinBureau Trading. I also interview on Wednesday Benjamin Cowen, and if you can skip the first 3 minutes where I have a technical issue, I'm sure you're gonna enjoy the discussion, a pretty technical one. Also, 3 days ago, I had as a host at the Trading Parrot, Matt, and we review all the on-chain data from the Bitcoin Magazine Pro website, also totally worth watching. As you can see, interest in Bitcoin remains flat at 30. Now we have not just 2 but 3 readings in a row showing 30, which is quite surprising after seeing this move back above 100k and the inauguration day coming up on Monday. I wonder, where are all these retail? And although I make a lot of jokes that retail constantly getting things wrong, following the wrong influencers, I have a very strong feeling that very little people actually follow me on this idea of going long when we were losing 90k, building up a position and taking advantage of it. Later in the video, we're gonna see how the bottoming signals are now no longer calling for a bottom. Indeed, some of them are calling for a top. We'll get into that just in a second, but let's do the due diligence. When it comes to aggregated open interest, we are again in an area of strong alpha. We need to analyze what we are seeing in front of our eyes. This is very revealing, and as with any alpha, it can put another data point on top of the table, which might play or might not play out. Nothing is magic here, and I remind you that the strength of all these data points are in putting them in confluence, rather than just finding one and saying, oh, this one is fascinating, I'm gonna bet all on it. Never do that. If you've been watching the channel, you know already that we use the open interest in all this area of the megaphone pattern, 8 months of alpha coming from the moves of the open interest. And my speculation is that we might be able to get away to do the same in this new range. Let's just naively do a quick analysis of what's going on with it. Number one, we get a lower low on the open interest in here. We got a lower low in there. That is no news. We did have a sweep the lows before a pump event in the past few days. This play out in a very similar fashion to this so far. I remind you that we still don't break above the highs. Those highs are at 108 point something. Yesterday we crossed the 105. So there is still some work ahead of us. There is something different when you look at the highs in here of the open interest versus price that is not currently playing out, and I think that is giving us a secret hint that something is not the same as this setup, and I want to highlight it. And there is a chance that that screws the whole setup and we call it very early, but there's also the chance that I'm looking in the wrong place. But let's look at it. In this area in here is where I see the alpha. The alpha is to do with the open interest reaching 21.4 billion, breaking out from the range of this blue line that you can see there. This is the only time and the first time, 21st of October, that the open interest is higher than the whole range of 8 months before. Where are we with the price at that point? We are at 68.6, and just by placing the mouse there, you can tell that we still don't break the highs. We are below the highs of 73.5, if I remember right, in this area was the high. So my alpha consists in the open interest preceding the price action. Now let's go to what we are doing yesterday and today. Open interest hasn't taken the highs of 34 billion. Indeed, it's against this resistance that comes from the extension 1618, which is 32.28 billion, and it cannot escape there no matter what we managed to achieve yesterday with the price. The price is putting a higher high at 105 and the open interest remains rejected by 32 billion. That is not the same story as in here, and what is implying is that there is a potential for a bearish divergence of price versus open interest. We got the opposite in here. We got the open interest breaking out first, price following up. Here we get open interest rejected and price breaking out. Could be nothing, but we're gonna keep an eye on that in the upcoming days and see if the open interest follows up and it also breaks out to the upside, giving us a clue that we're just looking into the wrong place. We are at 10% up in January, finally in the green. A yearly green candle is starting to show up, following with the typical trend of 3 years in a row. This is the year of topping out with the price based on the 4-year cycles. That is based on past performance. It has worked so far, but nothing is guaranteed forever. On the weekly time frame, now we are in a bullish area, right? So we managed to break out above 98.2, and we still have the next job, which is to close above 104.4. That is the highest close of a weekly candle in the whole history of Bitcoin. In my opinion, we don't need to do it by Sunday. I think it's already bullish that we have achieved to produce a liquidity hunt, a sweep the lows event right there with a green candle breaking above the first resistance. That is all positive. You can tell that previous times we did something similar and we had continuation. So what we need to do is just protect this close by Sunday, not to close by Sunday below 98.4, because that is really gonna look ugly. That is the analysis on just price action on the weekly time frame. Yesterday I was worried and I was keeping an eye, and I call out for let's keep an eye if we see something similar to this. Luckily, you can tell that is very different, right? We closed a green candle above it, we took this high, and we are now being below the resistance of the final order block before seeing an all-time high. So that is positive, and it means that potentially this bullish cross, as opposed to this and this, is gonna be the third one and the one that actually plays out. Daily bullish crosses below zero line in a bull market for Bitcoin tend to be pretty significant and have a good performance. If we look at the 4-hour time frame, you can tell that 102.5 roughly has been resistance multiple times in here, all this area there, here, and even right before breaking out we tested. So it is positive that instead of seeing that rejection that I was worried about at 103, we cut it like a war knife cutting butter, and now we are coming from the top, testing it as support. We need definitely to hold that. It is not a life or death situation. I think we could come back a little bit lower and then try again. That is also possible, but of course the cleanest way to continue with the rally is to hold the 102.5. That kind of secures continue to see these aggressive moves very quickly, very small bull flags, and then continuation. This is another bull flag just like this one in there. So there is that potential that you come below, you grab shorts, you trick them, and then you have another impulsive move. Obviously we need to be looking into the liquidity to see what is currently the motivation in here. We're not just gonna trade it blindly and think, oh, another bull flag, that's it, I'm gonna trade it. We need to look into data. We do data-driven trading and setups in this channel. We don't trade opium. If that's your thing, there's plenty of competitors across all YouTube for you to enjoy. We got August support in here on the RSI daily up until January, and we got a rejection there showing us that that white line is still a thing. It is a strong level of resistance. You can tell there that it coincides at that time with the top of the range. We were concerned at this level before and we saw a rejection. That rejection took us into below the range. We reclaim it, we increase the chances to go all the way to the top of the range, and we have managed to close above it. That is positive, and this order block is what is sending back the price to test at 102 point something. Yesterday I insist a lot in the amount of risk that there is in this area, and the risk is for coming out, breaking below 102 and then just becoming a bull trap. So far that is not the case. I think we are increasing in chances to take the all-time high, but before you draw conclusions, I'll show you some data that is actually saying the opposite. For me, the first data that I care is that once you have a channel this long and you break down, you tend to respect these levels. And let's be honest, this is a rejection just like this one, but it's a small rejection. So there could be another another attempt immediately, or this could come back into this support and try again later. And we could rally all the way just against the white line as a resistance. If we break above it, we have a higher chance to see a global breakout on the daily. It's global because this line is connected with the two tops, this top and that top there. There is nothing else. So if you break above this trend line, then you could see a rally into the resistance of the daily at RSIs of 84.85. And that is the recipe to take all of this. You have to achieve that, basically. You might think that that's impossible, but not going very far, dropping the time frame from the daily into the 4-hour, you can see that we actually did it. We created a bottom information in here on the global support. We broke out the global trend line, which in this case has a much better slope. On the daily is like this. On the 4-hour, the global has like a 45 degrees slope. And we managed to get to the 77. Indeed, we went into 80. We pinch it just like we did in this area there. That is calculated with statistics and is telling us that 77 was the top of the range. The statistics were off by 3 points. After that, we have had this rejection there. I suspect that on the 4-hour, we should be looking now into a channel to the downside. But the daily can still do a lot more. In here, it is against resistance. It is low likely, but it is doable if market maker decides to take all of this. Big whales have started a little bit to do some micro distribution in here. So we are kind of bouncing off the 0.43 and starting to move towards the 0.47. Very microscopic move, not really worth taking any action, but definitely worth keeping an eye, because that means that they are depositing a little bit more than in the previous days. And I sustain my point that retail is not coming back. You know, it remains at these very low levels of holdings and volumes in terms of demand in the past 30 days. Whereas the open interest has reached above the top line. This blue line shows when the open interest has gone too far. And if you take a screenshot of this and you look at every single top of the price, you're going to notice that it's always preceded by the open interest going first above the blue line. So that is this indicator. You can take it as a great indicator to poke your shoulder when you're getting too hooked up with those profits running a swing trade, reminding you that you are now part of a herd of people running a very high leverage or high risk, we could say, trade that is definitely worth considering reducing, closing, or protecting that risk at this point in time. Notice that I'm talking about a swing trade and not about holding Bitcoin. So if you're a Bitcoin maxi and when you hear these comments you start feeling offended, there's no point. I'm talking about swing trades. These swing trades are supposed to be closed, take the profits and run. That's kind of the idea. The rest of the indicators are still in areas of bottoming, but I see, for example, that the orange is starting to curve towards going back up towards that zero line. And you can tell that every time that we do that, price starts rallying. So this indicator is calling for continuation of the rally. This one is calling for a pullback. And this one is saying that retail still hasn't come back. Spot ETFs, this week we have very good news. After 3 days of inflows, 700, 600 and 900, we managed to put a new all-time high in cumulative flows on the spot ETFs on Bitcoin. On Ethereum we have 166, which is pretty cool to see. That was on the 16, and on 17, 23.9. We are now back into the extreme greed. Every time you hear extreme greed, I remind you to wake up in the morning, prepare your coffee and slap yourself 3 times. Every time you are in extreme greed. This is the time that you need to wake up the most, okay? Extreme greed for me is not the time to buy. It's the time to undo what you've been working on when the index was finding lows. We talk about the lows of 50. We say we could go to 40s. This is the area where we start looking to add into our position. Extreme greed, you do the opposite. Everybody, every video is gonna be telling you to buy. These coins are amazing. This setup on Bitcoin is gonna go to 150. You just cover your ears, slap yourself 3 times, finish your coffee and look for exits, particularly if you are into a leverage trade. And I'm not telling you to panic sell. I'm telling you to look for that exit, or at least to think, if price does this, I'm good to go. You know, I'm not gonna tolerate a rejection of this size, or if I hit this final target, I'm good with those profits. I take my money, sit down and wait for the next setup for a swing trade long, or maybe look for shorts. This morning we have quite a bunch of long liquidations. Of course, prior to that, during the pump yesterday, we have all the shorts being liquidated. In total, we have almost 500 million, with 67% of them being long. The short-term liquidity is almost exhausted. As I said in the update before going to sleep yesterday, we took the 103. I speculate that potentially we were just gonna get in here and come back aggressively. I was wrong. At the moment, as I said, since we went for this bucket as well, and now we came back to this area and we are just hanging there, at least at the time I'm recording this video, this makes it look like a retest of the scene of the crime. Breakout, come back, retest that 103k as new level of support. If it's confirmed, this could continue up. On the longer term, you can see that we complete more or less 90% of all the green that we have in here. Right above the price, we have this not vacuum, but it's just blue and a little bit of green. I'm gonna zoom in so you can see it. So obviously that incentive now is a little bit less than what we have in here. That is part of the reason I was saying there is risk in here. The risk of just pinching 103, coming back down and losing steam to be able to continue straight away with an all-time high and the higher targets of liquidity. Let's look at the order book on High Block Capital. Later we're gonna have to talk about the net longs shorts delta, because that is really incredible development. If you're new to the channel, green is areas where we have a lot of bid, red are extremes where we have too much ask, and during this whole period up we haven't had that much ask. It's just a wall of red, but nothing has crossed the thresholds where we are usually looking for an exit. Indeed, with this retracing, the bid is coming back in. It's not the same bid as in here. Of course, you have a larger heel there of demand, same in this bottoming area, and here is a bit more mild, so we'll have to see if this manages to continue. In terms of longs on exchanges, you can see that now we are at 40.9, very close to that 36, 37, which is the threshold that I'm using to mark these areas of very low level of longs that typically coincides with some of the tops, not all the tops. Sometimes it triggers in this area and then the price continues to rally. In this area, it coincides with the top. In this area, top, that one is top, this is a top as well, this is close to a top, and you get the point. Most of the time it's right, but not always. And I think right there at 40, we should be getting a red. I don't know why it's not flagging it as red, but we are below 40 at the moment. We are at 41, it's not below. So below 40, we are 1 point away to becoming red. The delta is putting the longs now at 950,000, and that is a big gap of delta of liquidations. That means that in the shorter term, there is just too many levels to liquidate of longs, almost 1 million in delta. And if I remember right, the last time we had almost 1 million, it was around the price of 102.7. After that, we crashed all the way to 89k. We are in the middle of the Trump rally, which is not precisely what I usually call the bananas zone, but it is a rally very significant, and it's mostly driven by open interest, leverage traders, and definitely the ETFs have been helping with those inflows too. But retail is just sitting on their hands. There is no buying from retail. As I showed you earlier, their volume, their demand in the last 30 days is pretty much reaching an all-time low at this point. And I think this indicator updated 2 hours ago, so it is what it is. The next selling wall in the order book on Binance is at 110k, and I will say that it has increased substantially. I think a few days ago we were at 80 million, now we are at 100 million, and you can tell that as soon as we reach 105k, both purple and brown whales, which are the largest whales, started selling there, almost like if they had the plan to exit at that point. Going into the net longs and shorts, you can see that we pinch my early channel, and now I'm gonna have to decide what to do with that event. Remember that my goal in the upcoming days is to identify the channel, and I did a very early attempt using these two tops, but now given that we have broken out there, I'm gonna have to adjust this, and just judging by eye, I feel like this is starting to have a similar slope to this, but actually it's even more pronounced with what we have done in here with the longs. We reach 20,000, which is more or less one of the highest peaks, coinciding with this one in early December, and only higher a few times in this area between September and October. So hopefully, if we continue increasing in this way, we can use this alpha. Definitely in the green, I never buy, and in the red, I look for areas of confluence with trend lines and stuff like that. I will say let's catch up with this indicator once it is somewhere in here, and if it continues, if it's there, those are my areas of interest. If this starts falling in there and it continues to go up and it reaches that area, that's a third area of interest. Of course, this for selling and these two for adding. I'll let you know if I hear any news from my notifications. I remind you that if you follow me on Telegram, Instagram, Twitter, you're gonna be always up to date with what I'm thinking about the market, anything that changes. Join the community and talk to other people as well. For that, I recommend Telegram. All the links are in the description. And yesterday we were talking about this 103. I'm gonna refresh this and see how things have evolved. And now we have the 104 and 106, but they are a lot less substantial as the 103. Below the price is where we have now the largest levels of liquidation that is in confluence with what we are seeing from high block capital. On fair value gaps, when we were here at 89, we said, wow, we have a full road paved to the top until 105 to take all these fair value gaps. And that's pretty much what we did yesterday, closing the day with no fair value gaps. Overnight, we built this one at 104, and right below the price, currently, we're kind of pinching this one that could bring us back down below that support we've been discussing of 102.5 that has been resistance multiple times in this area. Remember that we did something similar in there. We pinched below, we took the fair value gap and we carry on up. We could do the same thing, pinch fair value gap, rally. But if we do that, you see how fast it happens. You don't do this, pinch that, stay there, build 3 more candles to the sideways. That spells doubts in the minds of the traders. It has to be a pinch quick, 1 candle, max 2 candles, and then back up. Stay too long below here and people are gonna start thinking, okay, then the next ones are doable too. On the weekly time frame, as I mentioned yesterday, we have this yellow line in here that we've been respecting as support up until June of 2024 during this whole bull market. We are talking about from 2022. We test as a resistance when we lost the support around July 2024. In this area, we were battling with the megaphone pattern. We reconquer, we came back down once again. And here we are testing it as a resistance the first time. And during this week where we are testing it for the second time. Notice that this time we tested once and it sent us back down into 49K. That is why it's still relevant in my opinion, this whole trend line in yellow. And I have decided to track this value in the price using the reverse RSI yesterday. And that is the main reason I told you to watch out for RSI 69 on the weekly time frame. You can tell that that has a value of 104K, and at the moment the price is respecting it as a resistance. Thanks to that, you can see that the RSI is testing it twice. Ideally, what we want is to close the weekly slightly above to basically show the middle finger to the line and say, I'm sorry, we're gonna continue with the Trump rally into the next resistance. But if we don't manage to get such a lovely gesture, there is the chance on the table which highlights once again the risk I've been mentioning in every video of a rejection in this area. Notice this time we have 1 rejection, and the second time we went there, we recover. This time we got 1 rejection and we are having the second potential rejection. So that is the reason I bring this to you today as well. Dollar remains below our resistance of 110. I'm not gonna call for a top this time. I suspect this time I'm gonna be right then, but this comes from 1985. That top connected with 2022. It's giving us 110. I have no clue if that's gonna be the top. Last time I claimed for a top was around this area and I failed miserably with 6 points further up. Gold is right where we left it at 2,700. VIX corrected within the channel back to the lows of the range, and that is a consequence of Nasdaq and S&P having reclaimed the 21 weekly, which is definitely a great signal. S&P loves to reclaim the 21 weekly. Nasdaq closed below below the previous week high, and S&P produced a beautiful green engulfing candle, but it hasn't managed to take the highs of the previous week. Some people have been asking for liquidation levels of altcoins. It's gonna make the video very long, and I'm sure that some of you moaning bitches are gonna start telling me you are making videos too long and blah 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 blah, but I don't care. I'm gonna do it for you guys. If you ask for things, you know, I don't have any trouble spending a few more minutes doing this. So here it goes. Ethereum on the longer term liquidation levels, and I'm gonna do this because I suspect that there could be continuation on the rally, although the technicals are saying nope, this is it. But in case the madness continues, which you know Bitcoin enters these areas of madness and sometimes it can happen, let's do a bit of TA on Ethereum, and you can tell that we are still below that resistance. But if Ethereum manages to break out somewhere like this, we got that liquidation level that I was telling Guy from Coin Bureau that might be an interesting area to start unloading for a potential pullback. Of course we want to get higher, but there are still no areas of big liquidations of $5,000, and that is because here not many people enter in a short with low leverage. But if they do, eventually they can load this into red and we might rally further. That's why it's important to have access to trading different. You can get a discount with a link in the description, but as of now it's interesting for market maker to liquidate people up until 4,200, possibly up until 4,400. But as I say, this is as of today. Tomorrow there might be more liquidity and things can change. My first target on XRP was $3.3 and the second target is $4.4. The analysis, I have done it in multiple videos. The last time I did it was in the video yesterday in the live stream on Coin Bureau Trading, and you can tell that we have hit this liquidity on XRP at 2.8. That's where most of the shorts placed the risk. They were betting that we were not going to be able to break above the previous highs. They were wrong. They got liquidated, and as you can see, there is no liquidity pretty much above the price. There's just this at 3.4, which means that not many people have short this right there, and that there is not incentive at the moment to continue liquidating people. So if XRP needs to rally, it's gonna have to be organically because new longs enter or new spot holders acquire XRP. But this sort of impulsive move that you see in here cannot be achieved just by new holdings. This is the result of people getting liquidated. The price moves this fast when there is a snowball effect of liquidations caused by an area like that. So I wouldn't expect necessarily to see something that impulsive, but the price could creep up going higher if there's new spot holdings. And I'm also gonna cover Solana just because it's also available on Trading Different in the longer term chart. Solana is looking pretty good in here. We have a double bottom formation and you can see that we have broken above the neck. Incentive to liquidate shorts is very mild, I could say. There's a way larger incentive to go to 117 and even $100 and liquidate all these people in a long there that started their trade on the 3rd of October and apparently have been adding more risk into this area. If there was any sort of catastrophic event, I would love to buy once again at $100 or slightly below on Solana and get another ride up rather than having to think that my risk is too close to the red. Of course, entering on this neck is not as bad, but getting very close to these levels there is where your risk is gonna just go too high. And remember, when I say risk, I'm not talking about upside potential. There can be upside potential always, but it's always an equation of risk versus reward. Guys, if you want to trade Bitcoin, altcoins, and have access to the best services and products in a top-notch exchange, my two choices are Bybit and OKX. And at the moment, in the description, there are links to open an account on either of them. On Bybit, you can get 30,000 in rewards based on trading volume. On OKX, 60,000. And also, by using those links, you reduce the fees to the minimum. But I understand if you don't want to be doing KYC, because those are KYC exchanges, which is a hassle and also requiring to do VPN to access them. It's just too much trouble. When you are in a trade, you want to access your trades fast and easy without having to remember to switch on the VPN. And in that case, you can go for one of my two exchanges with non-KYC, which are Bluffing and 2bit. Either of them is offering great rewards. You can open as many accounts as you want with different emails. That is another plus of not needing KYC. On Bluffing, there are all these rewards, including a MacBook Pro, Apple Vision Pro, or even a Rolex that you can use to show off as a crypto lord. On Tubit, we are also running this promotion based on deposit and trading volume. You can claim your bonuses as well. It definitely helps the channel to continue operating with your support on opening any of these exchanges. Sometimes people say in the comments, how can I transfer my KYC, or how can I support you the best? I really appreciate those gestures, guys. Thanks so much for watching the video. Remember, tomorrow's update is gonna be on Coin Bureau Trading channel. I'll see you in the next one. Bye bye.